Hello, welcome to another episode of Read With Me, the financial freedom section. I hope that you saw the last video of chapter 10 of the cash flow quadrant. It was ridiculous. It's crazy when you're reading a book and the book aligns with how you're feeling, what you're thinking, like what you literally dreamt about. Because when that's happening, it's like, that's spirit talking to you. Okay. That's like God saying, like, here's your sign. You're in the direction that you need to be. Okay. I wanted to read one line from chapter 10 before I get into chapter 11. It's many are desperately seeking short-term answers because they have money problems today caused by consumer debt and lack of investments due to their uncontrolled desire for immediate gratification. Immediate gratification. And that's so true. Like right now we live in the information age, obviously, but we live in a space where if you go to Instagram, if you go to social media, if you watch TV, or sorry, not who watches TV nowadays, but like if you go to Netflix, if you go to Hulu, if you go online right now, if you just Google something, you get the information now. Like I don't have to go to Blockbuster, drive there, pick out a movie, and then go back home and put it in the CD or DVD thing and then wait for it to load up. No, I literally go into the living room, click a button, and I have millions of movies just there, and you just choose what you want. Or if I pick up my phone, if I have a question, I can just ask the phone and it'll Google it for me, and it'll be right there, and it'll give me 3 or 4 different answers. Or if I go into social media, if I post something, and I can know immediately if the audience likes it or if they don't. Or there's just, right now we live again in the information age, but like instant gratification has become a norm. It's become this like normal thing that people are so entitled by. And that's what Robert was really trying to eat at, like, and like peel these layers from. Like he was mentioning you shouldn't try to eat the whole elephant. I don't know why you would eat an elephant in the first place, but what he's mentioning, you shouldn't eat the whole entire elephant in one shot, because you just can't do that. You have to eat it one bite at a time. And when people are wondering, like, you know, if you come from like a poor, let's say, he mentions people born into poverty eventually become wealthy and they stay wealthy for generations to come. Well, it's because they maintain the long-term vision and the plan. They believe in delayed gratification, and they understand the power of compounding in their favor. So those 3 things, I really encourage anyone listening right now, and honestly, myself included, I don't take this lightly, like at all, because as I mature, as I get wiser, as I grow as a human being, you know, I realize that those little decisions each and every day, especially when you're looking to get to a different quadrant, or you're looking go from this S to a B, or, you know, from an S to an I, or even E to I, or whatever you want to call it in this scenario, in the cash flow quadrant scenario, there's baby steps required. If you just jump the gun and believe that it's going to happen, you might hit a mistake that might be very, very costly, but at least you learned it, you know, and you can learn from it, you can grow from it, and you continue to improve yourself. Okay. So what's really powerful now is we're going to get into the 7 steps. There's 7 steps here. 7 steps that Robert's going to get into, and he's going to end this book with these 7 steps. So in this video, we're going to go into chapter 11, and we're also going to be doing chapter 12 of the cash flow quadrant, because it's a very short chapter, these 2 chapters, especially chapter 11. It's like 3 pages, and it's basically just giving you an outline of the tools required to get to where you want to go. So he calls step 1, it's time to mind your own business. This is chapter 11. He starts off with, we are programmed to mind everyone else's business and ignore our own. Have you been working hard and making everyone else rich? Starting early in life, most people are programmed to mind other people's businesses and make other people rich. It begins innocently enough with words of advice such as these. So if you catch yourself remembering all these, what I'm about to read, just recognize it, acknowledge it, but don't feel trapped to it. So I'm going to read these even though they hurt while I'm reading it, because I hate saying things like this, but I'm going to read it for you just this time. Okay. So he goes into saying things like, go to school and get good grades so you can find a safe and secure job with good pay and excellent benefits. Work hard so you can buy the home of your dreams. And after all, your home is an asset and your most important investment. Having a large mortgage is good because the government gives you a tax deduction for your interest payments. Buy now, pay later, or low down payments, easily monthly payments, or come in and save your money. People who blindly follow these words of advice often become the following: employees, making their bosses and owners very rich. 2, debtors, making the banks and money lenders rich. 3, taxpayers, making the government rich. And then 4, consumers, making other businesses rich. Instead of finding their own financial fast track, they help everyone else find theirs. Instead of minding their own business, they work all their lives minding everyone else's. By looking at this financial statement, you can begin to see how we have been programmed from early age to mind everyone else's business and ignore our own business. Okay? So if you caught that, if that stung a little, put it in the comments, because he's taking shots at everyone right now. He's about to get into these 7 steps and he's not taking nobody into this emotional, he's just taking everyone in, okay? He's not caring about your feelings right now. Anyways, so check out this diagram. Okay, this diagram is where he's mentioning this is how we have been programmed from an early age to mind everyone else's business and ignore our own. And that means that when your income statement, your income at the top, expenses at the bottom, in your income box, you mind your boss's business. In your expenses, right underneath the income, well, you mind the government's and business via taxes. With every other expense, you mind a lot of other people's businesses. And then your balance sheet, your assets and your liabilities. Your assets, this is your business, and then liabilities, you mind your banker's business. And if you don't know what mind your business is, I encourage you to go back to that chapter, okay? Because you need to understand what that actually means. And go back into the playlist, type in mind your own business, and you'll find it. he goes into this, hey, you got to take some action here. For many people, their financial statements are not a pretty picture simply because they've been misled into minding everyone else's business instead of minding their own business. To change all of that, I suggest following these action steps. 1, fill out your own personal financial statement. In order to get where you want to go, you need to know where you are. So this is your first step to take control of your life and spend more time minding your own business. See the following sample financial statement as used in the cash flow game. 2, set financial goals. Set a long-term financial goal for where you want to be in 5 years, and a smaller short-term goal where you want to be in 1 year. Set goals that are realistic and attainable. A, my 5-year financial goals are, and he states 2 sentences of how you should write this down into your notebook, into your, journal, wherever you want to put it. And he says, this is the first statement. I want to increase cash flow, i.e. passive income you earn without. I want to increase cash flow. And by cash flow, he means passive income, the type of income that you earn without having to work for it. So he's like, write this down. I want to increase cash flow from my assets to blank per month. To fill that out, he wants you to put that into words. I want to have, this is the second one, I want to have the following investment vehicles in my asset column. And then he puts real estate, stocks, businesses, commodities. So under the 5-year financial goals, he wants you to write these 2. Then he goes into my 1-year financial goal. He has 2 sentences as well. Number 1, I want to decrease my debt by blank. And then number 2, I want to increase cash flow from my assets to blank per month. And then the next step, C, using my 5-year goals, I will complete my financial statement again to show how it will look like in 5 years from today. Now that you know where you are financially today and have set your goals, you need to get control of your cash flow so that you can achieve your goals. And then he shares the actual income statement like so. If you have the book, you have the actual exact outline of it, which is awesome. If you don't have the book, join the Discord. We're going to actually, I'm going to take this exact page and put it into the Discord group so you have access to it. So make sure to join the Discord group and get access to it. That completes chapter 11. Like I mentioned, it's really, really short. He just basically wants you to, take a look at your financial statement, take action, acknowledge, take inventory of what's going on, and then take control of it. So let's dive into chapter 12, which means take control of your cash flow. Awesome. So that's step 1 that we just went over. This is step 2. People who cannot control their cash flow work for those who can. People who cannot control their cash flow work for those who can. Many people believe that simply making more money will solve their money problems, but in most cases, it only causes bigger ones. The primary reason most people have money problems is that they were never schooled in the science of the cash flow management. They were taught how to read, write, drive cars, and swim, but not how to manage their cash flow. Without this training, they wind up having money problems and then work harder with the belief that more money will solve their problem. As my rich dad often said, more money will not solve the problem if cash flow management is the problem. He goes into saying, here is the most important skill. After your commitment to minding your own business, the next step as the CEO of the business of your life is to take control of your cash flow. If you do not, making more money will not make you richer. In fact, more money makes most people poorer because they often increase their spending and get deeper into debt every time they get a pay raise. Who is smarter, you or the banker? The majority of people do not prepare personal financial statements. At most, they try to balance their checkbooks each month. So congratulate yourself because you're already ahead of most of your colleagues simply by completing your financial statement and setting your goals for yourself. So chapter 11. As CEO of your life, you can learn to be smarter than most people, even your banker. Most people believe that keeping two sets of books is illegal. And that is true in some instances, but if you truly understand the world of finances, there must always be a set of two books. Once you realize this, you will be as smart and maybe smarter than your banker. As CEO of your life, always remember these simple words and diagrams from which my rich dad, who often said, for every liability you have, you are somebody else's asset. For every liability that you have, you are somebody else's asset. So strong. The following is an example of two sets of books, yours and your banker's. Your balance sheet pretty much has your mortgage under the liabilities without any assets, and then the bank's balance sheet means that your mortgage is their asset, not their liability. As CEO of your life, you must always remember that for each of your liabilities or debts, you are someone else's asset. That is real. That is the real two sets of books for accounting. For every liability, such as a mortgage, car loan, school loan, and credit card, you are an employee of the people lending the money. You are working hard to make someone else rich. Good debt and bad debt. Rich dad often cautioned me about good debt and bad debt. He would often say, every time you owe someone money, you become an employee of their money. If you take out a 30-year loan, you've become a 30-year employee, and they do not give you a gold watch when the debt is retired. That's funny. Rich dad did borrow money, but he did his best to not become the person who paid for his loans. He would explain to Mike and me that good debt was that someone else paid for you. Bad debt was debt that you paid for with your own sweat and blood. That is why he loved rental properties. He encouraged me to buy rental real estate because the bank gives you the loan, but your tenant pays for it. Y'all. Rental real estate. The bank gives you the loan, but your tenant pays for it. Income and expenses. Not only do the two sets of books apply to the assets and liabilities, but they also apply to income and expenses. The more complete verbal lesson from my rich dad was, for most every liability, there must be an asset, but they don't appear on the same set of financial statements. For every expense, there must also be an income. And again, they do not appear on the same set of financial statements. This simple drawing will make the lesson clear. Here you go. Basically saying, two columns, you have income, expenses under payee, and then the same goes with payer. From the payee, all the expenses are going directly back into the payer as income. All right. So the financial fast track and the rat race. The concept of two sets of books can be used to show you the financial fast track and the rat race. There are many different types of financial fast tracks. The diagram below is one of the most common. It is the track between a creditor and a debtor. It is simplified, but if you take the time to study it, your mind will begin to see what most people's eyes do not. You will see the relationship between the rich and the poor, the haves and the have-nots, the borrowers and the lenders, those who create jobs and those who look for jobs. Okay. I want you to take a screenshot of this. I want you to drill this into your life right now. Okay? Let's see. Basically saying that if you're a debtor, your job goes into your income and then automatically flows into your liabilities. And because it's in your liabilities, it directly goes into your creditor's income. And because it's income from your creditor's income statement, their income automatically flows into their asset column as a business in the light of a loan or a line of credit, which then turns into a liability for you. And then it obviously creates this loop, because from your job, you're paying someone else's assets. Basically, that's what this is. The creditor will often say, because of your good credit, we'd like to offer you a bill consolidation loan. Or would you like to open a line of credit just in case you need some extra money in the future? Do you know the difference? Well, the path of money flowing between the two sets of books is what Rich Dad called the financial fast track and the financial rat race. For one to exist, so must the other. So there must be a minimum of two financial statements. The questions are, which statement is yours? Which statement do you want to have? Those are the correct questions. This is why Rich Dad constantly told me. This is what my rich dad constantly told me. Making more money will not solve your problems if the cash flow management is the problem. The people who understand the power of financial numbers have the power of those who do not. Making more money will not solve your problems if cash flow management is the problem. The people who understand the power of financial numbers have power over those who do not. That is why step 2 to finding your own financial fast track is take control of your cash flow. Take control of your cash flow. You need to sit down and map out a plan to get control of spending and minimizing your debt and liabilities. Live within your means before you start to expand your means. And then he goes into, hey, take some action. And he has 4 main points. Okay. 1, review your financial statements from step 1. 2, determine which quadrant of the cash flow quadrant you receive your income from today. 3, determine which quadrant you want to receive the bulk of your income from in 5 years' time. Number 4, begin your cash flow management plan. And then underneath that plan, he has 2 points. A, pay yourself first. Put aside a set percentage from each paycheck or each payment you receive from other sources. Deposit that money into an investment savings account. Once your money goes into that account, never take it out until you are ready to invest it. And never is in capital, by the way, y'all. So then he congratulates you. Hey, congratulations, you have just started managing your cash flow. So those 4 steps. Part B of that, focus on reducing your personal consumer debt. And he has 6 different tips. Okay. And if you're part of the Billionaire Inner Circle, you will get these 6 tips in the weekly recap session. So, I mean, just get it in, you know? I'm literally writing it down like tips. I'm going to say them here, but make sure to join the Billionaire Inner Circle to get a physical copy. Tip number 1. If you have credit cards with outstanding balances, discipline yourself to use 1 or 2 credit cards. Any new charges must be paid off in full every month. Do not incur any more long-term debt. Tip number 2. Come up with $150 to $200 extra per month. Now that you're becoming more and more financially literate, this should be relatively easy to do. If you cannot generate additional $150 to $200 per month, then your chances for financial freedom may be a pipe dream. Tip number 3. Apply the additional $150 to $200 to your monthly payment of only one of your credit cards. You will now pay the minimum plus the $150 to $200 on that one credit card. Pay only the minimum amount due on all other credit cards. Often people try to pay a little extra each month on all their cards, but those cards surprisingly never get paid off. Tip number 4. Once the first card is paid off, apply the total amount you were paying each month on that card to your next credit card. You are now paying the minimum amount due on the second card plus the total monthly payment you were paying on your first credit card. Continue this process with all your credit cards and other consumer credit debt. With each debt you pay off, apply the full amount you were paying on the debt to the minimum payment of your next debt. As you pay off each debt, the monthly amount you are paying on the next debt will escalate. And then here goes tip number 5. Once all your credit cards and other consumer debt is paid off, continue the procedure with your car and house payments. If you follow this procedure, you will be amazed at the shortened amount of time it takes for you to be completely debt-free. Most people can be debt-free within 5 to 7 years. Here's the final one, tip number 6. Now that you are completely debt-free, take the monthly amount that you were paying on your last debt and put that money towards investments. Build your asset column. That's how simple it is. And then he goes into a little side note. Kim and I explain this process of reducing and then eliminating your bad debt in our audio program, How We Got Out of Bad Debt. He's such a great promoter, huh? Robert. So these 6 tips here, if you want to get them, make sure to either re-listen to what I just shared with you in audio or go into the Discord. We're going to actually have them written out in the Discord group. And if you do want to join the Billionaire Inner Circle to get the financial freedom, and honestly, I'm so excited that he said come up with $100 to $200 extra per month. So crazy. So the Billionaire Inner Circle is $222 a month for now. Eventually that will increase significantly. But we actually teach you how that $222 per month actually gets paid through passive income. So I'm so excited for you to join that, because if you're looking for ways to pretty much have a membership that pays for itself and it literally pays for itself through the education and the strategies that we're going to be sharing, that's one. But the same exact strategies can be implemented on a larger scale for you to produce that cash flow continuously. So I'm so excited for you to check that out. And the next video, we're actually going to go deep into the next chapter, which is chapter 13. So if you got a lot of value from this, make sure to hit the like, share, comment, do what you got to do. Much love to you. See you in the next video. See you later.